end of the Middle East week, but nonetheless, markets still moving across the world. And this morning in Asia, prices falling a little bit as yesterday saw the climb right up to the tip of $70 and not quite get over the mountain. Prices dropping back a little bit from that peak that we saw back in March when we did go over 70, but as of yet, not closing over 70. So the big question, as we've been asking in the last week, is are we still range bound in the 60s? The big magnet of 65, will it pull it back or not? Let's kick off with Dr. Carol Nackley, CEO of Crystal Energy, the regular Thursday commentator. Dr. Carol, all of the numbers in the major economies, US, Europe, and China, seem to be really underpinning all markets, and that the negative side, the challenged countries of India and elsewhere, are not derailing what we're seeing in the other markets.
Good morning, Sean. Good morning, everyone. Well, look, at the end, the economists talk about net effect. So you will continue to be in this kind, that actually defines the range of oil prices that you referred to earlier. But we continue to be within this kind of corridor whereby you have some forces trying to put upward pressure on prices and others downward pressure. And of course, the net effect will determine the direction of the market. But overall, you refer to the US and China, and together, it's mind-blowing. They nearly account for 40% of the global economy, and they by far outweigh the risks emancipating from other regions. The EU is looking better today, but I would still put it in the risk area. But add to that India, Japan, for instance. But together, those countries, those regions combined, the risk areas, they contribute much less to what China and the US combined do to global economy. And the same can be said for oil demand. And therefore, you have this kind of net effect is positive. It's supporting the overall direction of the market, which is in terms of recovery. But whether it breaks through the $70 ceiling, it remains to be seen. And if it does, for how long it will remain there? Because remember, we don't know. I was reading something about India yesterday that they are expecting the number of deaths to double within a week. That's a disaster. But again, if I have to be cruel, it does not hold back the economy. It may slow down its recovery, and therefore it's all the oil demand. And this is where we're seeing the ceiling of $70. But I was excited. I was hoping that it would break through the $70 because I saw your comment on LinkedIn yesterday. However, it retreated later on.
Good. Also, welcome back, Chris Wood. Welcome, Chris. I hope all is well. Nice to have you back on the show. Your thoughts on the inventory draw yesterday, this week? I suppose we saw API numbers and then we saw EIA numbers yesterday. And all in all, they were quite sizable, 8 million barrel draw. But I'm wondering how much do you think that could be countered as the sort of reality sinks in that Carol pointed to, that whatever draw we'll see in the US, we're going to see builds in India and in Asia or other countries, Japan also in lockdown, that will cancel out the draws in the developed markets of Europe and the US.
That's exactly right. So what we're looking at is data on draws in countries that seem to be doing very, very well through the coronavirus and the pandemic. And what you've got is you see the headlines, you talk to people in London and New York, they're now talking about getting back into the office. And that's pulling in some demand and some optimism in there. And those are some of the traders I'm expecting that are trying to push the prices up to 70 because they're all optimistic and happy and not really looking at the rest of the world. And unfortunately, we sort of got this epicenter of India that seems to be cascading out now into the surrounding countries. I was reading some of the headlines in the local newspapers here around Pakistan and Cambodia, and all the numbers are up in the sort of Asian regions. And I think that demand is still falling and will continue to fall for a bit and remain stagnant. You've got refinery runs not looking very good in those sort of Middle East Asian markets. And then My other concern I have is, yes, they're not in high demand countries, but they're high density countries. And this is when when you hear about the discussions around the evolution of coronavirus and viruses generally, does this become a petri dish for new versions, new strains of the coronavirus, which will then get out there as people travel? And that's a little concern around what they're discussing, further waves in the future.
Good morning, Dr. Aldo Flores Quiroga, former Deputy Secretary of Energy for Hydrocarbons, Mexico's Ministry of Energy. Dr. Aldo, the interesting story in the CapEx that I've noted this week, which I wanted to get your views on, is that while the majors have cut back a lot on CapEx in last year, it would appear that they're still willing to spend a lot in South America, Guyana in particular, and other countries there. That the development remains quite solid south of the border, so to speak. Your thoughts on that, and when new supply or the lack of it will start to impact the market?
Well, I have read the same news that you have, and let's say that it makes sense to me. These are long-term projects, and this is part of a set of investments that will be required as demand picks up. And let me just point out something about what's been said. We're still in the conversation about demand. We're not supply constrained. Of course, when demand picks up, that will be a different question. And that's where this production from South America or even the shale patch will become very important at the margin, obviously, as much as we'll see the expected increase in OPEC and production. But these are investments that have been in the books and planned, and there's a lot of exploration going on also in Mexico, not only in South America. So we can expect more activity offshore in shallow and deep waters in Latin America.
In terms of that investment into the new supply, the fact is that a lot of it was cut last year, and we're not yet at the point where it's starting to impact. In the medium term, perhaps we have another story on our headlines this morning in the digest that there's already a series of bets going on to $100 oil in the medium term because of the sort of shortage that's seen on the horizon, but yet not immediate. Do you think, from the point of view of the surplus, Dr. Aldo, that is still there, the 8 million barrels of idle supply, despite how well OPEC are managing its keeping it under control, does it present a cap for the oil price recovery? I mean, we come up to 70 and we slip back again, that it's just unrealistic to move beyond 70 when you've got 8 million barrels of idle supply.
Well, there's part of that, but there's also let me go back to the demand question. Carol was very eloquent and very clear on what she said about China and the US driving this recovery of demand, and also Europe. But there's those very signals as well. And we have not only what's going on in India, but the question about new strains of the virus and the like. So this cautious approach that OPEC is taking, I think it makes sense for the stability of the market.
Well, it's certainly having great success. Carol, the story does appear to be moving. I mean, the sort of glass half full piece. Europe increasingly looking. UK, I know that you're hoping to get back to your apartment, but nonetheless, the news appears to be that Germany will not be on the travel green list for the new UK opening. And I make that point because it feels like there's multiple versions of countries having opening. You know, we'll open to this country and then they'll open to that country, but that it's not expansive across all markets. And this disruptiveness of opening will ultimately curtail the kind of oil demand recovery expected in the third quarter.
Indeed, Sean. I mean, look, everybody was expecting a boom in international travel in the summer. But when you check what the airline bosses are and representatives are saying, you see that they were from the beginning very cautious about that, because yes, you may have recovery within a country. So within the US, you have domestic travel really it took off compared to the pandemic, when the pandemic was spreading rapidly there. The same thing in China, but the international travel, that for me remains a mystery, because now in Europe, yesterday I read actually interestingly that they will seek to, and I don't know if they passed it already, what is it day to day? Because people were talking about even yesterday that they would allow travelers, fully vaccinated travelers, to start, to go around like for holidays. So we're heading in that direction, but a full recovery in international travel doesn't seem to be happening in the summer because of these restrictions on mobility and the requirements that you are vaccinated. And we know that vaccination is going well in a certain number of countries. The last time I checked the numbers, it was around 70% of total vaccinations in only 10 countries. So imagine, the rest of the world catching up. Now the US said that they will try to remove the intellectual property, which upset the pharmaceutical companies. But this is one way perhaps that can help to spread vaccination. But as long as we still have this uneven distribution of vaccination around the world, I really find it difficult to see how international travel can pick up, because as you rightly indicated, there is a red list for countries, and there's a blue or green list for other countries, but actually the red list is much, much longer than the safe countries. And as long as this is ongoing, we should be cautious about demand recovery, because you have the missing piece, that is jet fuel, that is yet to catch up with the demand of other oil products.
Chris, I'm wondering how the markets should be adopting the emerging narrative of shortages. The shortages of semiconductors are hitting automakers and tech giants and slowing down their ability to make the stuff that everybody wants. And so how that will impact demand over the coming months. Also, even to the extent of in the US, there's a shortage of qualified drivers for oil tankers, if you like, the large vehicles that carry retail gasoline from gas station to gas station. Apparently, during the collapse last year, a large number of them retired, and so there's a shortage there. There's a shortage in lumber. I mean, all of these shortages that are starting to creep into the headlines when demand is soaring all at the same time. How do those two things, do you think, impact the recovery and hence the demand for energy? Chris, you're on mute. Sorry.
Sorry about that. Yeah, so it's a very good question, Sean, and something I've been looking at. It's the concern that I have, and we're seeing a lot more of it recently, is you've got the manufacturing base of the world going into lockdown. You've got India, you've got the Asian countries, some of the Asian countries, all having trouble, and that's starting to have ripple effects into the market. And that's actually going to have a knock-on effect onto the markets that have gone through vaccination and are booming, because it's going to restrict their own internal assembly and manufacturing. We're seeing, as you rightly mentioned, lumber. We're seeing chip manufacturing. This morning, I was out taking my bike in for a service, and I was asking them about a new bike, as you would. And they said they just can't get hold of bikes. There's not enough carbon fiber for the manufacturers of those bikes.
There's even a shortage, a significant shortage of shipping containers to put that bike into, if indeed it was available to send to Chris Wood on Palm Island. It's not. The shipping container isn't available. The bike isn't available. So you cannot spend your money, and hence.
Yeah, we've got a problem, and the Suez Canal hasn't helped that at all with the Ever Given fiasco, because that's just created bottlenecks all through the supply chain as well. So we're going to have. I was looking at a headline this morning. We're going to have ongoing supply chain disruptions for many, many months to come, even not if it's into the back end of the year. So start your Christmas shopping now.
Feliz Navidad. Dr. Aldo, if there was a comment of the week or blunder of the week, perhaps, Janet Yellen signaling, coming out and actually saying the words, we might have to do something about inflation. I'm wondering, from the point of view in the US, obviously there is large price acceleration on all fronts. We're expecting tomorrow the latest jobs report to be quite bullish. Your thoughts on the sort of the evolving issue of inflation in the US economy and policymakers' attitudes towards it?
Well, the question is if we're going to see a short-term inflation recovery in the level of price increases, or if it's going to be a structural factor. I think most economists believe that this is a short-term story, but it is indeed very interesting that given the price increases, the commodity price increases that we're seeing, that the Secretary of the Treasury finds it appropriate to say that it may be a good time to rethink what to do about interest rates. Still, we have to 1 month of economic recovery or two, given where we're coming from, might not be enough to make a decision on that in that regard. But that's the question: whether it's a short-term adjustment, or will we be seeing something more structural going on?
Well, it's certainly the short-term adjustment narrative that the monetary policy makers are holding on tight to. But it feels a bit, Carol, like they're, a mountain climber on a cliff who's lost his ropes and he's holding on to his nails to the idea that this inflation is temporary. And if we say it enough, we'll believe it.
Well, look, I mean, it's not that desperate in terms of holding on tight with their nails. But what Yellen actually was, first of all, I was surprised to see somebody like Yellen commenting on the monetary policy, because this is more the job of the Federal Reserves, and usually we listen to the chairman. But what she tried maybe to do was just to appease fear of inflation, saying that, look, if inflation is going to kick in, we have the medicine for it. And you can see that this did not really freak the markets out, because we saw a bit of reaction, a bit of sell-off, for example, of tech stocks, but not really a major tsunami hitting the stock market, because the market kind of has bought already this kind of statements. But again, it has to come from the chairman of the Federal Reserve, I would say, to start thinking more strategically about the impact of inflation.
I mean, they did have to very quickly backtrack. I mean, the market did take ultimately, this is not a when scenario or an if scenario. One day they're going to come out and say this.
Exactly.
And the market knows that. And they thought, oh, maybe is this the day? Holy cow. Caught me a bit before I expected it.
But it is more for the more longer term, not for the immediate term, I would say. But there's kind of preparing the market of what to expect. And I would say it was more like appeasing the market, that if this happens, yes, we have the solution for it. And I want to add to this shortage, because when Chris was talking about shortages of in the supply chain bottleneck, I mean, the latest year you find shortages in everything you order, including of woods, for example. We have some building work happening here, and we cannot get wood panels to finish the job, even though you're in the middle of the Black Forest. But that is translating further into higher prices of various products. I hope this is going to be temporary, but it doesn't translate necessarily into immediate, inflation. So I tend to believe what the chairman of the Federal Reserve said a couple of weeks ago, that this is more a rebound, but not recovery. But at the end, they can step in and raise inflation rate to stop the economy from heating further. But this is more of a longer term issue.
Chris, while inventories fell quite dramatically in the US count, we saw this week in Fujairah, oil product stocks climb to a 2021 high. Your thoughts on that, and what, obviously the local story of Fujairah, inventories climbing to a high for the year, and what that tells us about the regional dynamics?
It's Fujairah getting their dreams. They're becoming an energy center of the Middle East. And people are using the storage. I know I was talking to someone yesterday who who was relaying a story around one of the big terminal operators saying they're full. They're absolutely full, and it's a fantastic position to be in for Jara, considering when we were 2017-18, they were desperate for any volumes to come in. But what you're seeing, and again, it's a knock-on effect from the Asian countries. Demand slowed down, so people are starting to look at other places to store product until that point where they can start pushing it in. So it's a mixture of supply chain, a bit of optimism coming into the market, and hopefully there will be some more pull that'll bring those volumes down again.
Is it the same story that sees the Saudis cutting their OSPs into Asia, that the situation in India and so forth, that is suppressing demand?
It's a combination. You've got to look at the IEA data that came out, where the US has reduced its Middle East, its OPEC oil buying, and then you've got Asia on top of that. India, a big buyer of barrels from this part of the world. So demand and has really tailed off for that. So yes, you're right. It is a knock-on effect of those countries, and I think you're going to see it start expanding out into a few other countries that have high populations in the sort of Asian sort of subcontinent region.
Well, Japan as well is shut down.
Yeah.
Let's go to the survey question and give everybody a chance to make a view on this. Will India and other countries still navigating massive pandemic challenges see inventory builds that will cancel out draws in the US and the EU? We saw that just in the story we just talked with Chris there. Fujairah inventories building, US inventories falling, and we do expect there is already indications that India consumption has dropped quite significantly. Some are even saying it's comparable to April 2020 levels. So whatever withdrawal we see in the US from a global point of view, global inventories will grow given the continuing COVID challenge in places like India and Japan and Brazil, which are, of course, are not small markets. Let's get the views on the room as to where we're going vis-a-vis the year, not the year, but the rest of the week ahead. Dr. Carroll, we're looking at the situation, obviously the end of the Middle East week, Europe week continues. We've come out of our holiday week. China is still on a holiday week. What do you think will be guiding the markets over the coming days?
Yeah, holidays. I don't know what that means anymore. Everything got mixed up. Working days and weekends. Well, look, I mean,
that's the idea that work from home remotely is actually the opposite. You live in your office. It's not
exactly.
You work from home.
There are no boundaries, really.
You live in your office. That's the thing. You
can hear, for example, my daughter running upstairs and making all the story about that. But look, I mean, you said there is economic data coming from the US. So if it beats expectations, then that might give us more optimism in terms of where the markets are heading. We're keeping a close eye also on what's happening in India. But again, I would like to take a longer term view about, and this relates to the survey question that you asked, Sean. And it relates also to the question that you asked Aldo earlier about investment gap. It all largely depends on the growth in oil demand, the speed at which it's like kind of race. So if demand increases fast enough to absorb this inventories, then we might see the market heading in one direction. But if the demand slows down, then you see a different direction. But I would say, if I want to focus on short-term, immediate, day-to-day movements in oil prices, while they keep our friends in the trading business on their toes, I doubt they will give us a sense of where the market are heading, because the market is it's much bigger and complex than to get a full picture from chasing day-to-day changes.
Dr. Aldo, sitting in Texas, I welcome you. We're at the sort of 100 days of the Biden review, or just sort of beyond it perhaps, but nonetheless, the assessment of his impact. And to correspond with that, we have the return of Trump is back in the news overnight. It sort of was flashbacks, like you were, reminded of being in a war or something, and suddenly you saw the image of your buddy being blown up or something like that. Trump on the screen. But nonetheless, Biden is very much in his 100 days, in his pomp, and now talking about vaccinating young teenagers and really progressing well. How do you see the 100 days, and is it changing America towards a different destination, do you think?
So far, it looks like, yeah, so, sorry, I thought I had mute on. I think it looks like that. It is definitely progressing very fast, and that's why we're seeing this recovery. And I think that for the summer driving season, we should be expecting indeed a strong recovery, despite what current news are saying. People want to get out and they want to drive. They don't necessarily want to get on public transportation. So we're seeing that more structural demand recovery, if you will. That said, I'm still very much of hesitant to call it a day with respect to what's going on with demand, because we have yet to see more stories about how COVID behaves and vaccination behaves elsewhere. But the US has done a very impressive progress in the vaccination campaign.
And does Biden, on that point, earn political credit for that? I mean, I'm wondering what he can do with this success, particularly looking at the Iran talks. Does he have political cover to do more sort of big things, if you like, rather than incremental things?
Well, but he is doing big things. This is an administration that has announced bold initiatives, both for energy, certainly, also in terms of foreign policy, what they are seeking to accomplish. And I think this is very much a set of initiatives owned by the Biden administration, also the acceleration of the vaccination campaign. So this sort of return of the US to the multilateral stage and this very big push for alternative energies means that we're in a different ball game right now, at least with respect to what's going on with the Atlantic Alliance and with North America.
Chris, last word. Let's get the survey result first. And yes. Will India and other countries still navigating massive pandemic challenges see inventory builds that will cancel out draws in the US and Europe? 2-1, yes. Your thoughts on that, Chris? And also welcome your thoughts on the continued progress in the Iranian talks and the possibility that oil supply could be also coming back to the market sooner rather than later, if indeed a deal is done in the coming weeks ahead of the Iranian elections.
Okay, so first, the poll result doesn't surprise me at all. I think it's going to be close to balanced to slightly optimistic, as we're seeing in the oil price. So from that point of view, you will see a netting off to some extent, not totally, but netting. Iran, the barrels are mostly in the market already, if we're honest with ourselves. It's not new. The Biden haven't been really strong on enforcing those sanctions like the predecessor, Trump, who would go after everybody who touched them. And from that point of view, I think if it actually does legitimately come in the market, it's not going to be a big surprise. I think a lot of it's mostly already in there. However, you see the headlines, very, very slow progress in those conversations. I think there's a lot of players outside of the room that are trying to make sure that the right deal is on the table before they move forward, because they don't want to go back to the days of a wrong deal. So from that point of view, it's a sort of, I don't think it's done yet, and it'll take some time unless there's a sudden surprise, but it's not going to surprise the oil markets.
It does seem, just to wrap up on that point, that while the Iranian talks are still going on in Vienna and they're reconvening today, that there's other developments happening in the region that could see this deal with Iran being a part of a wider realignment. We see today, again, in our digest, the Iraqi prime minister talking about talks between the Saudis and the Iranians. We've got the Turkish president getting into conversation with the Saudis, which is something that's been difficult in recent years. The Turks and the Egyptians having talks. So it does seem that there's a lot of big pieces on the chessboard that are at least in some kind of a parallel dialogue with the Iranian talks. Because if the Iranian breakthrough happens, it's a significant reconfiguration of the region, and all of the big players seem to be at least preparing for that, which would give, I think, optimistic outlook. If you consider it a positive thing, then you would say it's optimistic that Iran and the US will do a deal because of all the noise that's happening on the sidelines. I would say that. I think the other big development this week that one might pay attention to over the coming weekend is the decision in Europe to postpone, cancel, suspend the China investment agreement, which starts to consolidate the US-Europe position, multilateral position vis-a-vis China. If that consolidates and brings Germany firmly into that alignment, I think that's a big game changer, and how it plays out on everything else we would keep an eye out for. So there are just some thoughts for the weekend. But Dr. Carol, thank you so much for your participation this morning. Dr. Aldo and Chris, you're with the doctors here, come on.
Yeah.
You got to go to the
university. The best of the cream.
A PhD in new bicycles. There's the idea.
Indeed. And don't forget that Christmas shopping.
This Sunday, we have the joy of welcoming back not Dr. John Defterios, but nonetheless John Defterios to the program in his first post-CNN outing. If you hadn't heard, he did move on from CNN this week after 35 years in the broadcast business. And it will be great to welcome him back here and wish him well in his post-CNN universe. So join us Sunday for Week in Review with Christoph Ruhl and John Defterios. All the best, Carol, Dr. Aldo, and Chris, and everybody for joining us. Have a good weekend. Bye-bye.
Thank you, you too. Bye-bye.